imagine for a minute making $38 million a day just from an investment? That is really the economics of scale, or really the investing strategy that Warren Buffett has utilized, which we're going to break down in this video today. So a lot of people are kind of wondering, and we know Warren Buffett loves dividend stocks, loves them in the portfolio, and does carry a lot of them. But there are some changes to the portfolio that he has been making. And a lot of people do like following Warren Buffett. A lot of the really big investors looking at Berkshire Hathaway and their massive stock portfolio that they have, there has been some adjustments. And a lot of what they're focused on is really the income factor, which again, when you think of Berkshire Hathaway, when you think of Coca-Cola, they hold 400 million shares of Coca-Cola. They're paying $1.94 in dividends annually per share, which means 776 million is just coming annually from Coca-Cola. That, of course, is not the appreciation of the company. If the value goes up, if the stock goes up, this is just straight what they're giving back to the shareholders. So when you start looking about the biggest investment and where a lot of the money has been moving, Berkshire Hathaway sold $97 billion worth of stock in the first 6 months. So you think about that, we are almost at $100 billion of sales. And a lot of people are questioning where the money is going. And for the time being, it is about a massive stockpile of cash. Now, when we start thinking of cash for you and me, we might think of $100 bills. We might think of money in the bank. They are sitting on a lot of cash, but it is not cash where people, again, kind of realize what exactly it is. They're not sitting on, a giant vault full of money. $234.6 million is held in short-term treasury bonds. And that is where the money is coming from. The rest, of course, is in cash equivalents when you look at money market funds, when you look at different accounts. But when we start breaking in these US treasuries, looking at 6 months or less, this is where the yield is coming up. And as of this article, which of course is today, this is what we're sitting at for the maturities for these bonds. So looking at the bonds themselves, the 1 month is paying a 5.338, 2 months 5.32, so a little bit lower. And you'll see as we start really looking at these bonds and as they start going to a little bit of a longer term, the rate continues to decline, which of course, longer term, the rate should be increasing. But with the inverted yield curve, it's a little bit different. The short-term money is paying a lot more than long-term money, which of course is really evident right here. 3 months, you go into 5.22, 4 months, 5.14, 6 months, 4.94. So the 6 month is not even yielding that 5%. So when you just start looking at simplicity, when you start looking at roughly 5% is about the amount for the yield that they're getting for the cash or cash equivalent that they're in there. So again, thinking of the 5% at the 277 billion they have, you're looking at 13.85 billion, which is kind of crazy, which is what you're getting in dividends. Breaking it down, you're looking at $14 billion annually. This is also equivalent to 1.15 billion every month, or that equates to that $38 billion every single day that the company is making money. So a lot of people wonder why Berkshire Hathaway is not really in a really big and really poised area to buy and make major stock purchases. Right now, with where rates are at, there's not any need to. If you're sitting here and you're making 38 million a day or 1.15 billion every single month, you are happy to hold the cash as you are. So a lot of investors, including myself, waiting patiently and waiting to see what he's going to do, waiting for Berkshire Hathaway, waiting for Warren Buffett. And that's right, they might be even waiting longer until we finish out what is going on with these interest rates and seeing exactly where there are. Business valuations remain super, super high. Now, if you guys remember, and if you've seen the portfolio, liquidated half of the position in Apple, feeling it's really overvalued. He really liquidated a lot of the percentage or the portfolio that he had with Bank of America. So 2 of his biggest holdings, he liquidated, again, $100 billion from those positions. And of course, there's not really a big reason right now for acquisitions, for buying into new positions or buying into new companies when the treasury yields are still paying so much money. That, of course, when you start looking again, the cash hoard that they have, if there is a good opportunity, if there is a big dip in the market, could be a good value to pick up a couple different places. Now, I know he did pick up a petroleum company that he put quite a bit more money in, and he's been doing it kind of on a regular basis. But as it sits right now, they have $277 billion of money at their disposal, that if there was a company that they thought was a really good value, then of course they can invest in it. But this poses the question, and this is what we've talked about a lot of times. What happens when the interest rates fall? So when you're investing in bonds, similar to CDs, similar to savings rates, high yield savings, even looking at the T-bills, when interest rates start to fall and those maturities start coming due. So even now looking at a 9-month CD, an 11-month CD, a 23-month CD, when the interest rates start falling and they're thinking even 24, we could see an adjustment, 25, 26, seeing an adjustment. That means that when the Fed's fund rate right now, the target is 5.25 to 5.5. So what if in 2 years, this is at 2.5%, 3%? I'm really fighting off inflation, and congratulations. We might have or not had a recession at that point. But when they start going, the rates start going and move very, very closely with them. So what that means for us long-term as investors is you could play the game of holding a little bit of cash, kind of what we're seeing with Berkshire Hathaway, what we're seeing with Warren Buffett, but you could also have the time right now to buy into the market. Now, I know, again, the market is relatively high, but you have to take that really not timing the market, but it is the time in the market, because as soon as interest rates start to fall, what happens to the companies when you start thinking big picture? When rates start coming down, it is a lot cheaper for companies to borrow money. It is a lot cheaper for essentially running the company, because things throughout the United States get a lot cheaper. Gets cheaper to borrow money. So when you think of the housing market, when you think of the auto market, when you start thinking of these very large companies, it's a lot cheaper to raise capital. It's a lot cheaper to raise money when the rates start coming down. Now, in addition, with T-bills, again, CDs, all of these rates, money starts flowing right out of those avenues. So there's no reason why a lot of people are going to hop in and be really interested in buying these treasury bills when they get to 2 or 3%. All the money will start flowing back into the crypto markets. All the money will start flowing back into the investment side, the S&P 500. All of these large companies will see a very, very heavy influx of cash as soon as the Federal Reserve starts lowering these interest rates, which again could be as soon as this year. Now, according to the CME Fed Watch tool, investors, they're looking for a total of 2 percentage points by the end of 2025, which is interesting, guys, because right now, if we're at 5.25 to 5.5 is the target, if we're looking at 3.25 to 3.5, it is going to be fire when it comes to the stock market. There are going to be, and again, a lot of money moving right back in there. Soon as the CD rates start going down, as soon as these financial institutions start pulling back on a lot of the CD rates, a lot of the capital that they've been raising through CDs, of course, because they don't want to borrow, making money cheaper to borrow means that the economy is going to fire on all cylinders. And we're going to start seeing these really big companies pulling and really doing a lot more than we're seeing now. Now, of course, this is by design. When you think of Jerome Powell, the Federal Reserve, when the rates start going up, it is to slow the economy. It is to slow and remove the buying power of individuals. And again, that is by design. If you followed anything when it comes to the economy, it is what it is built for, and it is literally riding the waves up and down. We see essentially the rates go down, then we see kind of the peak of where it is. Rates go up, we see the exact same, kind of flattens out for a little bit until the inflation rate or the consumer price index, everything kind of gets to a point. Then we start pulling the rates down a little bit. And again, it's the waves that we're going through in the investment market. And of course, now is the time, in my opinion, to really be buying. So, all right, guys, one crazy investment, yielding $14 billion a year, or $38 billion a day with Warren Buffett. Definitely, if you're investing in those T-bills, let me know in the comments, and I'll catch you in the next video.